The following podcast is produced by Total Money Management AFSL 5686642. Everything you're about to hear is general information and education only. It does not take into account your personal objectives, financial situation, or needs, and it is not financial advice. Before being a silly sausage and acting on anything discussed, consider whether it's right for your circumstances and speak to a licensed advisor.
Welcome back to Total Money Management, the Signal and Noise podcast, week ending 21st of August.
August.
How we doing?
We're almost there.
Father Christmas is almost here.
Absolutely.
I've been told off this week. Apparently, I'm too dulcet and no one can hear me on the podcast. So
You're a gentleman.
I'm about to shout.
It's going to be a grumpy edition because I'm sick. So I'm just like, this week, yesterday and today, I was just going through the world going, nah, it's all terrible. We're all going to die.
Oh, so same as normal then.
It's
That's a chemical imbalance.
But it's like the news, right? Like you watch 25 minutes of the news and they're like, oh, here's all the death and mayhem and murder and, all that sort of stuff. And here's a dolphin story in the last 30 seconds to make you feel good, right?
Yeah.
Or a cat video or something.
Bit of an endorphin release. And
I just kept scrolling things going, it's all over. It's getting worse.
Well, what were the highlights this week?
Well, it was just, I've just considered that. I have to say, I think that the geopolitics is just getting really, like saying World War III is a bit of a stretch, but I don't think it's far away.
Yeah.
And in sense of classifying it. So I'm not saying we're heading into World War III, but I think we're getting close.
Yeah, I've totally checked out from the geopolitic nonsense now because for someone that's working 40 hours a week, it's so difficult to keep up with what's real and what's not.
Yeah.
So, it happened a few months ago. I was like, what am I actually looking at now? Because it's changing so quickly, and then it looks the same. And
yeah, it's interesting you raise that, Jake, because there were a couple of people I was talking to during the week who, like you guys, they work, fairly long hours.
Yeah.
And because I do it basically all day, every day, I don't realize how little other access people have to the news that I see.
Yeah.
I'm on X all the time. And because of that, I get all the news, right? And I can read, 20 articles a day, 5 papers, and all that sort of stuff. Whereas you guys can't do that because you're working.
Yeah.
And so it is interesting because when I write these things, I'm writing the newsletter going, man, what do I leave out?
Yeah.
Because see, I've seen like 40 things where I think, oh yeah, that's valid. Oh yeah, that's valid.
Yeah.
But you know what I mean? Like it's just, I can't write it a full one because it'd take you 3 days to goddamn read it.
Yeah. I think people listen to us for that reason as well. Like every Monday, the feedback that I get when I speak to either clients or just listeners is, like it's a sounding board. It's a sense check every week. So I think you're doing good work, mate.
Yeah, I think we might have said a few months ago, like when you get a daily, like I get daily newsletters, right, where they write to you and say, today gold went up 1.5% and, this happened. And in my line of thinking, that if you're really busy, that doesn't mean anything.
No, it's noise. Because is that relevant? Did it go down 2% yesterday?
Yeah. It's like, okay, what am I supposed to do? It's like nothing. It's like, okay, well, why am I being told?
Yeah.
So from that, what I'm trying to do is just pick major, like we talk about the major events and go, okay, we'll keep you up to speed on the Strait of Hormuz, Russia, Ukraine, the Australian property market, they're the big ticket items. And then occasionally we might throw in other stuff, but it's also got to be, at least relevant.
Yeah.
I think that's always sometimes the tricky bit.
Yeah.
And because, like you said before, because people like Donald Trump make a new statement every 15 minutes, it's really hard to go, well, which one's valid?
Yeah.
Right.
He doesn't know.
I'll tell people about that. Actually, no, that's been updated. I don't need to tell people. I've got to tell them, no, that's out dead in the water too. So it gets, like the Americans came out today and said, we've been secretly getting oil out of the Strait of Hormuz, right? 10 million barrels. It's like, no, you haven't. No, you haven't. You're lying.
Yeah.
Right. So, But that it's moving so quickly in terms of strategy about, well, what are the Iranians going to respond with? And now they look like they're attacking the region. And then yesterday they said, well, we might target US assets in Europe,
Right, I didn't see
right?
that. Wow.
Well, if they do that, then boy, oh boy, all bets are off.
Everyone's in the bed together then.
Well, the thing that's concerned me for a while is after 9/11, they had the sleeper cells. Remember the terrorists, they activated Hezbollah secret cells in Europe and America and Australia and places.
Yeah.
So that's what concerns me this time around, that they've been already doing that sort of stuff. Now, the Americans would be aware of that, but it still drags a lot of, it becomes really dangerous when you get random terrorist events,
Yeah, for sure.
right?
Mhm.
That's, really dangerous sort of stuff. And that's what seems to be going on.
Well, we talked. Probably it would have been only a couple of months ago, but around a global order, like the renegotiation
Yeah,
of the
yeah.
global order. We actually haven't talked about that for a bit. So, is there any changes, or is it still the same? We're all trying to find out who's friends, and
Yeah,
Well, yeah, I know in the notes here you've put everything's up for negotiation.
yeah,
So
yeah.
every country for themselves. Is that
Ev-
where you see it heading, or
Yeah, everybody that, as I've said before, is that the world order has changed. The Americans have made a decision that globalized world no longer benefits them. And now there's a lot of countries, Europe is just as rich as America combined, right? Europe combined. It's got about 550 million people, right? China, right? India. These places are becoming really wealthy. And what the Americans quite rightly are saying is, well, hang on, you guys are still bleeding off us. You're stealing all our technology. You want us to run the world. You want us to put out all the fights and military and do all the spending, but you guys don't want to. You guys don't want to let us into your markets,
yeah,
or make a contribution to your own backyard. So that's why, again, Trump said, I think it was yesterday, Wednesday, said, well, the South Koreans can bloody well look after North Korea themselves,
yeah,
right? He said, we look at moving bases out of the Middle East, right? Because what Trump is doing, and it's not just Trump, it's the American strategy saying, well, hang on, we've got 800 bases throughout the world. Nobody wants to give us a hand. When we say, hey, listen, you guys could help us with the Strait of Hormuz, they all go, yeah, nah, not my fight.
Yeah.
And it's like, well, hang on. If it's not your fight, well, why are we protecting the sea lanes for you guys to receive all this stuff, but not give us anything back?
Well, that's been America's. I'm not sure whether it was an unwritten rule for decades that they were the protectors of the sea and trade and things like that, and other countries paid America essentially to have that privilege.
Yeah, it was essentially the Yanks after the war said, you got to remember too, the Europeans have been fighting each other for hundreds of years,
Yeah,
right? And, after a while, and dragging everybody
Thousands.
else into it,
yeah,
right? So the Americans basically said, all right, look, we're now the dominant economy. We've got the military. We'll guard so people can trade, but we'll write your military policy, right? So
Yeah.
in other words, we run global security, but hey, if you want to trade and sell stuff to, Somalia or Africa or Eastern Europe, go right ahead,
go for it. Yeah.
right? But those days are over. And the problem I see all the time, even with a lot of economists, they don't realize that America now doesn't make decisions on the global interest. The Americans are saying, hey, we're protecting our backyard, and that means we don't need bases in Middle East. We don't need bases in South Korea, right? And in fact, you guys want to export to us, no problem. There's a 50% tariff,
Yeah. Yeah.
right? And that's what's going on. Now, naturally enough, all of those who have benefited from it are cranky with it.
Yeah.
But the reality, the reality is a bit like, well, okay, but you got rich off the back of the Americans.
But that's the thing. I don't think many of them did get rich. They've all got insane
Yeah, yes and
deficits
no.
and debts. I think they benefited from uh, almost they allowed their industries to grow in other areas like finance and their defensive area. This is just my take. Their defensive areas and trade in a lot of Europe, for example, just went nowhere because it was
Well,
all imported and
yes
exported.
and no, Jacob. Part of the problem with Europe was the Germans. The Germans were changed it in. The Germans wanted the euro, and the reason why was because the German Deutschmark was a strong currency,
Yeah.
which meant, like America, that they would suck in imports. When West Germany combined with East Germany,
Yeah.
they wanted to export their way out of trouble, right? So they suppressed wages, which is what China did, what Japan does,
Yeah,
Yeah.
yeah,
right?
yeah.
So that's where
Well, after
You-
the war, World War II, all of Europe was skint as well.
absolutely, and the Americans rebuilt it with the Marshall Plan.
Yeah, yeah,
Right. So again, the Americans stepped up and said, okay, well, listen, like the Americans got exports and got rich out of it as well.
yeah,
But they could have sat there and said, oh, well, no, you can just, you guys can just continue to fight amongst yourselves.
Yeah, figure it out yourselves.
Right. But I know a lot of people see America harshly, but they've done a lot of good in the world.
Mm.
China was a backwater, mate, until the Americans said, okay, join the WTO and we'll take your exports,
yeah,
right? With the quid pro quo of saying, all right, well, at some point, you'll open up your economy and you'll be capitalists like us, right? Because, hey, look at us, we're all getting rich that way.
Yeah.
Well, the Chinese reneged on the deal,
yeah, yeah,
right? And you can throw mud at the Americans. No one's perfect. But the reality is, you've only got to look at global dynamics. Nobody's rushing, there's not people, going overseas in high water to jump into communist regimes,
Mm.
right? Everyone swims to Europe or the UK or America. Why? Because that's where you can get rich,
yeah.
right? You're not going to turn up in China and go, hey,
Yeah.
where do I
Yeah.
sign up and where do I get my free money and
Yeah.
my bed and breakfast?
Yeah, I mean, it's where it's safe as well. It's where there's economic growth, and it's interesting. All the expats going to Singapore and Hong Kong.
Absolutely.
I mean, to an extent, Saudi now as well, because
Yeah.
there's it's just you follow the money wherever the money is.
Absolutely. And the opportunity, right? I can tell you, I've lived in Japan, mate. It's a different world.
Yeah,
Right. And it's one of those culture shocks because, like Japan still uses fax machines,
yeah, right.
right? They're still distrustful of email, right? That's it. You look at that and go, oh, please, seriously, no way. I can tell you, you go to a local bank branch, there's probably like 40 staff, right? Like there's just mountains of paper.
The unemployment rate is really low as well, but that's without digressing. It's purpose. It's on purpose.
Yeah. It's really hard to move capital out of Japan, right? So it's not the same. And that's where we tend to think that Europe is just like us. And it's like, no, it's completely different,
Yeah,
right?
Japan. You mean like Asia or Europe? You're talking
Well,
about?
both of them,
Yeah,
right? They're much more heavily regulated,
yeah,
right?
yeah.
And so that's why if you want to get rich, you go to America, right? It's a big market, but Europe's big too. But it's the freedom
Yeah.
to be able to say, hey, two blokes in a garage and we're going to do a startup. It's like, cool, go for it.
Mm.
Right. Whereas in Europe, it's like, oh, no, you can't do that. You've got to have an office and you've got to have 14 agreements and, blah, blah, blah. So that's the dynamism of America is its upside, but it's also its downside, right?
Yeah.
Mm.
You
You mentioned you touched really briefly on China, and there's some notes here around new bank loans nearly fell to zero in July in China.
Yeah.
I'm not sure if that's zero being 100,000 really, or zero being actually zero, like one.
No. Zero as in the loans are falling.
But
now.
is this for residential or commercial? Like,
This
is
is generally
businesses not
loans
wanting...
in general.
Right.
Right.
Why?
See, this is, again, what you're seeing in the mainstream media is because Trump is so hated, everybody thinks that whatever goes wrong is America's fault.
Yeah.
Everybody thinks America's losing the Iranian stoush. Everybody blames America for not helping Ukraine, right? All this sort of stuff. And that's not really the case, right? And what I'm trying to do is, and again, you see, I saw this with Japan. I studied Japanese and Japanese economics, right? And that's the reason I kind of fell in love with it and thought, my God, these people are unbelievable, right? So what happened was, it was only after 10 or 15 years that I realized it wasn't cultural. It was the way the economic model was set up. And it's been done before. The Americans did it, the Brazilians did it, the Russians did it. And it's basically what is called state capitalism. But essentially what it's doing is the government says, we're going to do this, this, and this. Jacob, we're going to suppress your wages and we're going to use all the money we save to give to companies to build export champions.
Right.
And we're not going to let in any imports, right? Only commodities, because that's what they want to turn into the cars and dishwashers to sell back to us.
Yeah.
Right? So that's the way their model works. But the problem they get is, like with every model, there's inherent flaws in it. And I can tell you where China's going to have problems, because it's the same where Japan had problems, right? And it reached a point in the late 80s where the Americans said to the Japanese, you guys have got to stop exporting so much, right? You've got to start investing directly in America, right? And so that's when the problem started. That's the problem they've got with China. You see, China's exports are going insane.
Well, it's balancing it as well. And when you've got a communist and a capitalist regime battling against each other,
Yeah.
amongst other history, it's like you're not going to find. There isn't going to be a result that's even.
Well, no, because see, the benefit with Japan was at least they were allies,
Yeah.
right? And they were they're not free marketeers, but at least they're capitalists. The problem with China is it's a communist government. They have no intentions of being capitalist and democratic, right? So that was when the Americans worked out, unlike Japan, where they sent, what was his name? Jared Baker. They sent them over in the late 80s and said, righto, we need an accord here. You guys need to raise your currency, right? You guys need to start investing directly in America, right? Building car factories. And that's what the Japanese did.
Yep.
Okay. The Chinese can't do that because they're communists, right? They're there spying on them and they're a military threat. Yeah. So from that point of view, the Americans can't say to the Chinese, yeah, please come and build factories here.
They probably wouldn't want them doing that anyway.
Absolutely, Tom, because they're spying on them, but they're a global force, right? They want to rule the world. Now, you can argue that, whether America should or the Chinese or whoever, but the fact is everybody's busting to get into the American market because it's rich, right? But as soon as the Americans say, hey, cool, we'd like to sell stuff to you, it's like, no. Okay. I mean, I can tell you some of the stuff that the Japanese said they couldn't have American beef. And they couldn't have American beef because their digestion and their stomachs were different.
Oh, okay.
Right? They said they couldn't take American skis, like snow skis, because Japanese snow was different. Right? There's all these arguments where the Americans are going, what? Are you seriously? And the Japanese were expecting the Americans to go, right.
Makes sense, yeah.
Or it can't have your oil either.
That's it.
Yeah.
But that's what I mean. So this is why we've reached the pointy end where the world's changed. And as I said to you, it ain't going back. And it's going to be a really rough ride. It doesn't mean the world's ending. But what I'm saying is for investors, it's, the next decade's going to be a lot different.
Well, you've been saying for a while now, hard assets, commodities.
Absolutely, Tom.
The stuff that actually builds stuff.
Absolutely. And you can see that, commodities have had the best year in a long time and are now outperforming, right? And even when you talk about, they're all talking about AI and, it's going to do this and it's going to do that and all these data centers. It's like, guys, do you know how much copper, concrete, iron ore, silicon, etc. you need for these data centers? Because without the hard assets, guess what? You got nothing.
But all the money's flowing to stories and visions when you think about it. Like the SpaceX stuff still blows my mind.
Yeah.
NVIDIA I haven't checked it for the last few months, but the fact that was trillions market cap.
Tom, the stuff I've written it in the premium newsletter.
It's just
where I've talked about a bit more about AI, but the statements coming out of those mouths of the CEOs, unchallenged, is absolutely ridiculous.
But you just look at it, you go, okay, this all sounds amazing, but what if we don't have enough food?
Yeah.
What if we don't have enough petrol? What if we, lack the materials to build and, facilitate the birth rates we say we need?
Yeah.
Like all that other stuff.
Yep. Well, see, Elon Musk wrote Zuckerberg, my second favorite person, wrote a manifesto about AI and said everyone will have everything, right? It'll be abundance for everyone. Well, clearly that's bullshit, right? Elon Musk came out and said, in 10 years, money will be irrelevant. You look at it and go, geez, that's amazing. How do we get there?
Okay.
Just wrap that out for me with banks and paychecks and stuff, right?
I mean, that sounds
one of the guys with Dario Amodei said, I wouldn't be surprised if Anthropic's the only company left in the world. I mean, what a moron. What I mean?
They're all trying to sell something. That's what they're all trying to sell something. They've got investors to please, and they've got a self-image to upkeep. But the reality is that even if that was true, we're not designed for that.
Well, yeah,
humans want to do things and work and earn.
But I think I think I wrote in the premium newsletter, it would be funny if it wasn't so serious.
Yeah.
And what I mean is, and we've talked about, we've already talked about private credit and, the backing. And see, private credit is heavily in the AI sector. And the stuff they're doing, I'm telling you, it'll curl your hair. And the more I'm going to lay it out for us. And again, the reason why is because the trouble is always in the finance, right? Yeah. It's always in the debt. And what they're doing now is they're quote unquote democratizing, investment into AI, right? And when you see that, what it means is the greatest fool is the retail sector, right? People like you and me, right? Because we've got a superannuation fund. We don't really pay it that much attention. The super funds know that they're looking for returns, right? Private credit comes along and says, hey, we got these data centers and it's going to yield 9%, 10%. The superannuation put the money in and next minute it blows up, right? And this is, when you look at the last probably 30 years of bubbles, they're all financial crisis, right? The Asian financial crisis in 97, Russia in 91, the GFC in 07, savings and loans in 1983, about 1987, right? They're all catastrophic. And this one is bigger than all of them. And so that's why I'm really pessimistic about it, because I just keep looking at it going, there's no way to save this thing. It's like, it's like getting a couple of rowboats and going, try and see if you can pull the Titanic over because it's, tilting.
Yeah. And it's in multiple areas as well. It's not just one area of finance. It's in like 3, 4 or 5 different areas.
Absolutely. It's in life insurance. They're doing what Warren Buffett did, right? Which I won't bore you with now, but we will down the track. But I can just tell you the financing stuff, that if you have the same rules, you get the same outcome, right? And after they had the GFC, they just let them, they clean the slate and they let them do it all over again.
Well, they might just keep doing that forever.
Absolutely.
Because it seems to be somewhat working.
Well, they don't care.
Yeah.
If I've got to be honest, if you're making 30 or 40 million a year, you're not too worried about if things blow up, because personally you'll be fine.
Yeah. Yeah, they're all insured against it. They've all got personal liability. But I mean, to bring things back on shore, and in the same thread, it's very similar to groupthink. And something I noticed on our socials over the last week or two is people incessantly blaming 1 or 2 really easy levers for Australia's property increase over the last decade. It usually comes around to things like immigration and negative gearing.
Yep.
But in my view, that is a factor, but they're easy, understandable things to blame.
But it's also the incentives that we've had the whole time.
Yeah, absolutely, Tom.
Yeah, negative gearing.
It's the finance
CGT
again, right?
discount. Like, it's like
Yeah.
as a you're in sales. So am I. First thing you do is you look at the commission structure.
Yeah.
You figure out how
much am I going to make? Yeah.
and then you go, okay, well, that's what I'm going to focus on.
Yeah.
And that's kind of one of the things we've done.
Well,
and
and
then
banks lending to everyone at low interest rates. I mean, that you wrote a book, Low Rates, High Returns. On the thing. Right?
Yeah. It's just, again, we should address this actually and talk about property. What I'm seeing at the moment is, again, like what you sort of see in stock markets, when the market goes down 5 or 10%, everybody thinks it's a buying opportunity.
Yeah.
Right. And so what happens is the industry switches from it's a great time to sell stuff because that's how they make money to, it's a really good time to buy.
Yeah.
And what I'm doing is, if you have a look, again, you can talk about economic fundamentals, right? Immigration levels, but it really comes down to interest rates and finance. And as I said, I touched on, I think, might have been last week, Jacob, or the week before with you, that and I won't bore you, but the rules changed in the 70s about how banks could lend money. We went off the gold standard. So there was a whole raft of things that changed the way banks could lend.
Mm-hmm.
And banks no longer were conservative. The idea being, if we introduce competition, that'll be a good thing.
Mm-hmm.
Well, in actual fact, that's a bad thing in finance because what you do is you get lower lending standards.
Yeah, everyone's trying to beat. It's
well,
a race to the bottom.
Absolutely. You lend to the good people who have got money. Then you go to the tranche who's, kind of okay. Then you get to the ninja loans down the bottom. Then you get governments coming in saying, you only need 5%. Right. So all of this stimulates lending. And of course, they're all trying to get market share. Right. And then you've got buyers agents. Right. Then you've got mortgage brokers. So you've got all these incentives rolled in to promote property, whether there's a shortage or not. And like stocks, it's no good saying, it's just, banks are lending hand over fist. They're greedy bastards. You've got to come up with a narrative. There's lots of immigration and, we've never built houses and, there's all these excuses.
Yeah.
When you look at it, they don't really stand up. It comes back to things such as the government incentivized everybody to, go out and borrow and buy property. Well, what did people do?
Yeah.
Now, the problem
the immigration argument still doesn't stack up to me because it's not as if people are getting off the airplane and buying $1 million houses.
Yeah.
It just doesn't make sense to me, but it's such an easy, understandable thing. Look,
it's a lazy argument.
Immigration's gone up X. So is house prices.
Yeah.
It must be correlated.
But it's the other thing I wanted to bring up was, and I've got a few notes in there. What's happened is the problem we've got here is the inequality amongst the asset owners and the renters. And if you have a look here, it says, the investors people who owned an investment property were about 7% of the population in the mid-90s, right? When Howard came in and they did all the negative gearing capital gains tax, now we've got about 14%, right? So 2.3 million people own investment properties, right? So in other words, what that means is some people are not getting properties and others are getting more than their owner-occupier.
Yep.
Well, most of the people, not everybody, but most of the people who have done that have been wealthy either by being wealthy anyway and just pivoting into property, or old people, boomers, older than me, my age and older, who have said, we bought a property in 1980, now it's worth $2 million. We'll leverage off that to buy an investment property, right? So that's the problem. And so that's the reason why I think we've got to watch what happens in the investor market.
Well, it'd be interesting because presumably the money will just flow to new builds, right? Because the incentives moved. So I'm wondering how that will.
No, because see, Tom, the incentive is not profitable. You see, the builders are saying, well, nobody wants to live at, 40 kilometres out, right? Because new builds don't happen in, like New Farm, right?
Yeah.
New builds happen out the back of Strathpine where they're doing subdivisions, right?
Yeah.
Well, there's not many people who want to invest out there in a new build. You might want to live out there and say, hey, it'll take me an hour to get to the city, but I get a foot in the property market, right? But if you're an investor, you look at that and go, well, hang on, I've got to get a new build. It's probably going to have, there'll be problems with it. Then I've got to rent it out. It's, an hour away from me. The capital gain now has been cut in half with it.
Yeah.
The negative gearing is a real issue now,
Well,
right? Interest rates are rising. So an investor looks at it and says, I'll just go and buy stocks.
Well, they still get those benefits if it's a new build though, don't they?
Yeah, they do. You're right. Sorry, you're right, Tom.
But then who's going to buy it?
But that's exactly right.
Yeah.
See, the next owner says, well, I can't get those benefits. I don't want it.
Yeah.
So therefore, if you do a new build, you could potentially go, well, I'm stuck with this bloody thing for 25 years.
Well, the narrative's changed now as well. So even developers are going, oh, maybe I won't. There's obviously incentives from government to developers to develop and build, but not enough to make it worth it to then sell.
Absolutely.
So like just the sheer fact that interest rates have changed up and sentiments changed, no one's talking about it anymore.
Well, that's why the investor loans have completely died, right? Because investors have said, hey, gigs up.
Yeah.
And that's why I'm saying we've still got immigration. We've still got all those issues we had 2 months ago. What's changed? The change has been the government incentives that said, no, we don't want you doing that anymore. And that's where they cut the incentives off. That's when people went, oh, okay, no incentive. I'm not going to do it.
Yeah, I'll find something else. And have you seen the amount of new listings on realestate.com? I think we posted something.
No.
The amount of listings on realestate.com and Domain is like 3 times or 4 times more just within the last couple of months.
Is it really?
Yeah.
Because I was like, house prices haven't really moved.
No, they dropped like 0.7 or something
this month, but it's still up like 15% last year.
It varies, but you're right, Tom. We've got some dot points there to go through, right? Like if you throw out a few scenarios, right? What do you think's going to happen? Okay, it depends on the current level of equity, right?
Yeah.
If you bought in COVID and the property's doubled, you're probably a bit shitty, but you're also going, hey, well, at least I've made, 600,000, right? So you could still sell and make a lot of money. Okay, so that's the first part. You have to look at the current cash flow, right? Or the negative gearing, right? So again, you look at the borrower and say, okay, we should really get rid of this place because it's not going to be, we've missed the main boat. So therefore we should get rid of it because it's going to tighten our cash flow, right? Old people who have bought properties may well be saying, hey, listen, it's time we sold that to cash out and fund our retirement, right? So there's those. Prospects for rental increases, right, or decreases.
Well, apparently it's going up 30%. That's
that was a suggestion,
right?
But look, rents won't go up again. All of this is all this scaremongering by the property industry to freak people out, but also to keep buyers coming into the market. Right. And that's why you get this, hey, it's a good time to think about property. It's like, dude, it's fallen 2%. I mean, seriously.
Well, and even if it doesn't fall anything for 10 years, it's still a bad investment. Or 15 years, it's still a bad investment. Because you got to hold on to that. You got to be paying that mortgage, and if someone's paying 600 in rent, but your mortgage is 1,000, then you got to hold that for a long time.
And it's a big amount of leverage.
Absolutely.
Right. The expected capital gain, right? It reminds me of that old slogan, future returns may not resemble the past returns. A bit like, absolutely.
Yeah.
And that's why I say, you can It's like if you look at a chart, if I showed you a chart, you would see post-budget night where it collapses and you go, man, what happened that day? And it's like, bingo,
Yeah.
right? Because the incentives are completely different, right? And investors have done the numbers and gone, okay, well, it's no longer worth it.
Mhm.
It might be for some, but the idea now of like, oh, yeah, just get in and buy a property and you'll get rich is like, that's over.
Yeah, the glory days are over. There'll still be certain suburbs in Australia that carry through and do okay, but that's like anything. If you're gonna find the magic stock that does 10x, then we'd all be rich, right?
Yeah. And then interest rates, right?
Yeah.
Interest rates have gone up. They may drop a little bit, but it's unlikely they'll go back to what they were.
For a long time, yeah.
Right? And so you got higher repayments and higher interest rates, lower asset value.
Lower lending.
Yep. So there's that.
True.
And then you've got the big one, which is, of course, the demand for mortgage loans.
Mm.
And that's why I highlighted that with China, because to keep the market, to keep stocks prices rising, you have to have debt for somebody to buy those stocks. To keep the property prices rising, you have to have demand. And you have to have not demand for property, but demand for the money.
Yes.
Right? Which means you've got to have increasing debt through bank loans. Once that stops, it's all over. And that's what's going on.
I'm waiting for the banks to miss their earnings projections and see what happens there as well, because that's going to impact residential properties, but it's also going to impact Australian stocks. Because there's so many. I mean, most of the ASX is the banks and commodities.
Yeah, yeah.
So if all four of the big banks miss their earnings, which is inevitable at some point, then
the banks have been. You know, I did this. Oh, it was probably a decade ago, but the banks since the like mid 90s, of course, when property took off, the banks have absolutely killed it in terms of share price.
Oh, yeah, it's
Right?
ridiculous.
They've been fantastic, but you know they're going to roll over at some stage unless they can pivot to lending to the business sector.
Yeah, commercial.
Right. So you don't do a residential loan, but you do a business loan.
Mm-hmm.
Yeah.
Right. But the problem I think with that is you could lend to business, but if everybody's mortgage deep in household debt, there's not going to be a lot of. That's why the economy is not that strong. Because
what are the incentives for business? Because that's been impacted massively. With these last changes also.
Well, you know, if you come along, Tom, and say, "Hey, Steve, I want you to buy these computers," and I go, "Oh, Tom, I'm snow deep in debt with my mortgage." Well, you know, you're going to be selling less computers, right?
Businesses are also running really tight. I speak to people every day going, mate, I am not opening an Australian business. I'll open something offshore in Hong Kong or Singapore or somewhere else, and I'll run my services back to Australia. But people don't have the margins to invest and keep growing in Australia, especially in property.
I think it's just, look, I think it's going to, nobody likes paying tax, right? You know, two certainties in life, death and taxes, right? And people hate both of them. So I get that. But at some point, as I said before, I think what we do is we get bigger government deficits and defence spending, and that will soften the blow. But that doesn't mean, in my mind, that doesn't mean, oh, I should rush in and buy a property.
No.
Because again, like I was saying before with the American, you know, the world's changing. There's a little bit of this stuff of this. The assumption is not that you're going to, hey, Jacob, buy a property, you'll yield 8%. The property yield is still garbage, right? 2%, right? So you look at that and say, okay, well, even if the property goes nowhere for a decade, I'm getting 2%. Well, you can get 5.5 in cash.
Yeah.
Right. But the other issue is the underlying assumption is, the yield's crap, but don't worry about it because the prices are going to go back up again. Right. And that's why I'm saying, okay.
They always do, Steve.
What if they don't?
But no, they do. It's different now.
But that's what I mean.
Yeah.
You see, they're all pumping that idea of buy the dip.
Yes.
And it's like, okay, but what if it dips and dips and dips and dips? right? Which looks entirely possible
In the last
given
6
that
years,
all
it
the
hasn't.
incentives have burned
Total
out.
money management,
And the
AFSL
fact that it's done that
568642.
since
This
history
episode
began.
was general information and
It's not-
education
it's not as if
only, not
it's never
financial
happened before.
advice.
Yeah,
It
the
did
more
not
you think
consider
about
your
it,
personal
hey, it's
objectives,
looking grim.
financial
Like,
situation,
it just
or
feels
needs.
like a
Any
house of
stocks, markets,
cards,
or
and
strategies
like
mentioned
a lot
were
of
for
the things
illustration,
required
not a
to hold it up.
recommendation to
Yeah.
buy or sell. Past
But the rules
performance
have
is not a
changed. Like,
reliable
even like
indicator
with
of
the
future
business
performance.
changes,
Consider your own
like the way
circumstances and
trusts are
seek advice
taxed,
from a
Yeah.
licensed
the
advisor before
loopholes
making
for,
investment
Well, they've tried
decisions.
to close them all
companies
out,
and-
Tom.
Yeah.
Yeah.
you can't distribute money to
Yep.
lower earning family members as easily. Like there's
But-
so many incentives that have evaporated with the last budget.
Yeah. And that's why I say the world's changed.
Yeah.
Right? They're saying to people, hey, we're not interested in capital gains. We're interested in income. And income means you've got to employ people. And the reason why is simple, because we need to build stuff now.
Mhm.
Right? The idea that we get everything from China is over. Right? So we've got to start building some stuff. And to do that, first thing you have to do is get capital. Right. So how do you get capital if the banks are going, nah, we're just lending to Jolly Roger on the residentials? It's like, nah, not anymore, you're not.
Yeah, close that down and
Right.
start and bring some. I mean, look, there'll be incentives that we haven't thought about that happen over the next chapter, 5 years, 10 years that no one's thought about to stimulate some parts of the economy that the government want. But we're almost certain that they'll have much more of an impact on everyone's everyday lives.
Yes.
The government
Yeah,
than
yeah.
they have done to say we want to steer this part of the economy. Here are the incentives. Go wild.
Yep. Agreed. That's why I say, the big thing is the world has changed. And the second thing, as I said, the thing that concerns me is if we get a really bad blow up in the markets and we get a financial crisis again, Jesus, it's going to be like, stack that on top of the wars and
Yeah.
Have some
They're-
dry powder.
well, they're talking,
Funny, not funny.
they're talking about having a diesel shortage again, right?
Awesome.
This is what I mean. We're sleepwalking into these problems where I personally think if you get across it, you can go, well, hang on, how can we have this, 6-month war with Iran? There's oil shortages, but apparently nobody's worried about it,
Yeah.
right?
'Cause we're all numb, mate. We're all numb.
But Jacob, it's true, but that's how you get into trouble, right? Because it's what happened in the GFC. There were people saying, guys, this shit's getting really bad and out of control. It'll be all right. It'll be all right. Boom.
Bang.
Right. And, that's why I say you can't, there are people responsible that should be saying, listen, we need to dial this back a bit.
Yeah.
Yeah, but if
Right.
they dial it back, they'll set off alarm bells and potentially cause the panic.
That's
early.
exactly
So
right.
what do you
Tom.
do?
Nobody wants to dial it back because then they get the blame.
Yeah.
Right. So that,
Well, what's the edge? Like one problem, obviously, a massive problem is hindsight. and
Yeah,
we've
let's not
covered
leave
it.
everyone sad. After
yeah.
this episode. What's the
Okay. Here
option?
comes the cat video.
Because I'm feeling heavier. I'm just
Here comes the dolphin
Need
story.
more wine. Well,
No, I just
Go on.
I just wanted to highlight there. I bang on about this a bit, but it just when you look at statistics, and we use them as well, but what we try to do is give people a dynamic set of statistics. And what I mean by that is saying when you look at things, I read an article about superannuation, right, and about the returns, but the problem was it has a start date and a finish date. And there's no, most of us dollar cost average into super. So the outcomes will be different,
Mm.
right? Most of us have different asset allocation. So the outcomes will be different. So, but when you get a static statement is something like the average return's about 8 to 10. Well, we know that's clearly wrong,
Mm.
right? The returns are 16, 11, 4, 8. It depends where you start and when you finish. It depends on your rebalancing strategy, depends on your asset allocation, all that sort of stuff. But that makes it more, it makes it difficult to use a blanket statement.
Yeah.
Right. So if people say, oh, what do you expect to happen for the next decade? I can say to people, look, generally in the United States where the CAPE is 42, I would probably expect somewhere, below 5%.
Yeah, in the twos
Right?
or
Now,
threes.
I could be wrong, but I'm using as much data and valuation stuff as I can.
Mhm.
If I said what the standard argument was, Tom, 8 to 10, it's like, well, okay, where has that happened with a CAPE ratio at 42? Because it's only ever happened 2 times before, and each time the decade's been a nightmare.
Yeah.
So that's where you get those statements of, just invest in property, it always goes up. Okay, but does it really always go up? Just invest in stocks, they go up, right? And it's like, no, it's a little bit more specific. It's a little bit more nuanced than that.
Yeah.
And so what I'm just trying to do is give, when you read an article, just read it with that idea of saying, okay, is this a timeless statement, or is it just a simple like, 8 to 10?
Well, that's how every financial advisor earns a living.
Well, generally,
I can beat the average.
yeah,
I
because
can get you 10.
it just makes it easier.
Yeah, yeah.
If and I'm not defending them for God's sake, but I can understand why they say that, because it's really nuanced.
Yeah.
Right. But you don't walk in and go, hey, Steve, could you spend 5 days explaining to me what I'm expected to get for the returns?
Well, and then they'd say, I don't know.
Yeah.
Well,
Look, it depends.
Yeah.
It's the first thing someone asks me when they call us and say, hey, I want to do something with you guys. I'm not really sure what you do. What are your returns?
Yeah.
Not advice.
They're expecting me to go, oh, well, X. And I go, I don't know.
But, we could,
Steve's used his
we could
principles
say,
averaged a lot.
we could honestly say, here's what we've talked about, and they've all gone gangbusters.
Yeah.
But that doesn't mean that every tip we talk about is going to be an absolute, raging sensation.
Yeah.
Right. And that's what makes it important to understand the characteristics of the investments, right? Because then you go, oh, okay. So what you're saying is, it could be within this range, and that's based on history, right?
Yeah.
We're going to get told off for talking about returns.
Yeah, well,
Yeah.
probably.
It's not advice, mate.
Anyway, yeah, the bottom line is no one really looks after your money as much as you do, and it's really worth investing time and effort to do it, because as we've said, you can make 1 or 2 great decisions and it changes your life completely. Lots of people have bought one property and have made an absolute bucket load of money. Now, if they don't do stupid things, they'll have a really nice life.
Yeah.
Right? From only one simple decision. There are people who make one decision and it completely ruins their life.
Yeah.
So, you've got to get more educated about it, understand the nuances, and then go, okay, now I'm going in with my eyes open.
Yeah, even if you don't manage your money, it gives you the tools to question the people that are.
Yeah.
Final note, if you're listening to the podcast or if you've listened to it for a while, please leave us a review. It's awesome.
Please.
And we've been sat at around 90 for ages, and I know there's more people listening. So
Right.
please go and give us a review. It'd be great. Other than that, let's leave it there. We'll catch up next week.
See you then, gents.
Thank you.
See you, folks.